you want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions.
Hello and welcome to the Morningstar series, Ask the Expert. I'm Emma Wall and here with me today is Jeremy Beckwith, Head of Research for Morningstar.
Hello.
Hello, Jeremy.
Hi.
So a new year, thought we'd talk about what investors can expect from 2015. Looking then at the domestic stock market, UK plateaued pretty much last year.
Yes.
What does the next 12 months hold?
Well, I suppose the biggest thing the next 12 months holds is a general election, which is almost impossible to decipher what's going to happen. My best guess would be that we get a very uncertain outcome and neither the Conservatives nor Labour are able to get a majority even with the Liberal Democrats, which leaves UK politics in a bit of a mess and possibly a second general election during the year. So that's probably negative for companies' investment plans, and there'll be a lot of political uncertainty. So I think we'll tend to hold back confidence in the UK economy a little bit. But probably more importantly, it will mean sterling's likely to be weak. And that's actually pretty good news for the larger companies in the FTSE. And so actually, I would say we make some money in UK equities this year, not a huge amount, but I would hope to be somewhere around 7,000 by the end of the year, which is 6-7% up from where we are today.
And that's because 70% of the FTSE 100 or 70% of the revenues of the FTSE 100 come from overseas, so weak sterling is a positive.
That's right, and almost half the dividends as well. So the dividend base will be growing quite nicely in the UK.
So if you're not gung-ho about the UK, but sort of quietly positive, what are you gung-ho about?
Well, the market I like most of all is Japan. It's a market where corporate earnings are almost certainly being underestimated by the analysts because the weakness of the yen last year has not yet flowed through into higher earnings estimates. And it's a market where the policymakers are determined to try and create some sort of inflation. And they're printing money like there is literally no tomorrow. And they seem determined to continue to do so until something happens in Japan. Japan gets more inflation, and that's got to be good for corporate earnings in Japan. And Japanese valuations are amongst the lowest in the world, of the developed markets anyway.
Japan got a new prime minister.
Mm-hmm. Well, no, got the same one again.
Oh no, but as in last year, stock markets went up.
Yep.
There was an initial rally, and then they seemed to plateau because the third arrow seemed to miss.
Yes.
Is all of this just noise? Should we be worried about that, or as you say, people are underestimating the stock market?
Well, he went for a quick snap election in December, so he's got re-elected again, and that probably gives him a mandate to take more action with regard to the third area of the structural reforms. And if we do get into that, then that's more good news, I think, for the Japanese market. But I don't think you need to expect very much of that in order to be confident that Japanese earnings expectations will be exceeded.
And what then about perhaps a market you're not so keen on?
The market I'm not keen on is America. Very, very high valuations on almost every grounds wherever you look. On long-term earnings, on price to sales, even dividend yields are pretty uninspiring. And you have a market where most companies are stretching their profit and loss statements to show the highest possible profits. And sort of gap earnings, generally accepted accounting principle earnings, are much, much lower than the earnings they actually publish. And so the quality of earnings in America, I think, is not nearly as good as they appear to be. And valuations are very high. You just need a little bit of bad news about the US economy, and I think you could see a bit of a tumble in the US equity market.
And is that something that's unique to the larger stocks, or is that across the board? Because we've seen such significant rally over the last 4 years from the US.
Yep.
Is there anything left? Is there any value left at all, or is everything just too expensive?
There's not a lot of value left in the US market. Smaller companies got more expensive last year and underperformed last year, the larger ones. But they're all both large and small companies are very expensive in the US.
Jeremy, thank you very much.
Pleasure.
This is Emma Wall for Morningstar. Thank you for watching.